LED here, and this was the I was supposed to be on vacation recap, aka the August edition. So, for those who do not know, is I was supposed to take off the entire month of August. So August is actually my worst performing month in terms of percent. I've had red August, I've had flat August. It's been better in recent years, but normally it's just the worst performing month. This is especially true in the small cap land. Small cap land, you would see that these mega runners would just not happen anymore. They would only be up like 60% on the day, and everyone would be jamming along, and we'd all get bagged. I used to think that August was cursed. I just, when I was a new trader, I thought, hey, August, I just can't be green in August. I can only be red. Unfortunately, this was all mental. I was really just kind of self-destructing myself by thinking this. But I started to switch. So I went from a survival mentality versus a flourishing mentality. And what do I mean by that? So in a survival mentality, our goal is we're going to preserve money. Okay, so we're not going to, be eating our money all over the place. We're going to be very much focused on keeping the P&L curve steady up and to the right. We're not going to take any big swings or any big risk. Versus a flourishing month, a big trending month, that's when I take the big risk, I put on the big size, and I really go for those home runs. In this month, I don't do that. I learned that the hard way very early on in my career. So I do a survival mentality. Let's just end green, pay our bills, and move on. So what is the goal of this video? So the goal is to be transparent. I'm going to show you what worked, what doesn't work. I'm going to show you how I approach the markets in real time versus a whiteboard or a PowerPoint or some video I post on YouTube. This is just my raw thoughts, all done in one take, no edits. I also want to meet cool people who are serious, people who want to become better traders. This video is for you. You're going to learn what worked for me, what didn't work, and then the improvements and the mindset change for September. Now, September to the end of the year is my best performing months. So we are going to tune it up, turn things to the max, and really start taking those big swings to get that explosive growth. So we are going to start August 1st. Now, a lot of these trades are also posted in real time on my Twitter. You can follow me at LED Trades. But now, the more visual learners, which I put myself in that category, will all see this on YouTube. Make sure you subscribe. And maybe leave a comment down below if they're helpful, or leave a comment down below what your favorite color is. I don't know. Make sure you comment down below. I try to reply to all comments and all DMs, unless you can find the answer on Google. Alrighty. So 8-1. So this really is what changed sort of my mindset for August. So I came in August with a huge green day. And this is based off of the rainbow pattern. What is the rainbow pattern? So the rainbow pattern is when price goes all the way up and comes back down into the pot of gold. And you can see that is exactly what happened on SPY. Price went up. So here it is. It's up. And then it started to rainbow down. And then the second day, so this is day 2, we got continuation because we were below the previous day low, below the pre-market low. And this was a huge, huge, huge start for the month of August. You can see my puts went 380% for an overnight swing. That is a beautiful way to start August. And this is where my mindset changed. My mindset changed for August, where it's like, hey, I'm going to stick around until I can't take the chop anymore. And you're going to see during this video how we slowly move into chop and how I documented it in real time on my X. 8-4 Google LE model long. This is a A+ setup. The LE model states we want to be above an EMA. So we're above the EMA right here. And we want to be above either the pre-market high or the previous day high. We are above both. The solid line, okay, solid line is the previous day levels. A dotted line is the pre-market levels. You'll see I keep my charts consistent throughout this entire video and anytime I post it so you can follow along. We can see price rips through the previous day high, the pre-market high, and then what does it do? It comes down, it taps the ADMA. We take our scales into high a day. Then it comes back down, dips off the ADMA, and then we scale the highs. This is a beautiful LE model. I believe Google was in my top, I think 3 or 4 percenters, at least like dollar gainers for the month of August. I abused this stock. I traded this thing a lot, and you're going to see that. You should note that down. Why did I trade it a lot? Okay, it's a little secret for you. But, if you don't want to do any homework, you'll never make it, so ignore that. Okay, next. 8-4, Amazon Purple Profits Gap Fill. What is Purple Profits? It's when a price breaks a level. Okay, so the LE model involves levels. Purple Profits involves the EMAs. So we can see we break the pre-market low. So here's the pre-market low right here. Again, dotted lines are the pre-market levels. It comes down, back up, right to the 8 EMA, aka the purple line. Our target is going to be previous day low, and we got our previous day low. Again, repeatable setup, super easy to trade. You can't go wrong with something like this. This is what we call a free money setup, aka Purple Profits Gap Fill. This is also on a 10-minute chart because people are definitely going to ask in the comments. Now, another question I've been getting a lot on X is, yo, Ellie, why are you buying puts when the market's bullish? Or why are you buying blah, 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 right? So when I'm teaching people, I try to tell people, hey, if the market's going up and to the right, you should be finding stocks that go up and to the right. You would think that was common sense. However, most people need to hear that. It's not common sense as much as I thought it was. So yes, but here's the situation with SPY that day. SPY was grinding. Okay, so SPY entered into this like a grinding box. Okay, this is your NutriBullet or your blender. Okay, where all your profits evaporate. It's just grinding. Okay, but Amazon is trending down. It's clearly trending down. So I do not care if SPY is in this wiki grind chop box. Okay, Amazon still has relative weakness. And then you'll see once it popped out of this grind box, Amazon also popped. That is the difference. You need to understand how to read SPY to then execute your trades. Just because you're reading SPY does not mean you need to trade it every day. Key difference. This is 8-5. So this is SPY. No push over the pre-market high backside fade. If you don't know what a backside fade means, it means that a stock goes up and then the fade occurs when it comes back down. This is the backside. So we can see it tried to break out right here. It did not. It tucked its head underneath the pre-market low. You short pops to the purple line and you ride it until it breaks, which is right here. This is a beautiful short. There's not a long here. Okay, it's below the 8 EMA. It's below the pre-market low. It is a no push over pre-market high. Okay, pre-market high right here. Didn't break over it. Therefore, we look for the short because the long level did not trigger. We short pops to the 8 EMA. Very simple setup. So this is another beautiful trade. Okay, so this is actually a loser. So on 8-5, I got Jeff Bezos. Okay, he's still born in 1964. Jeffrey, okay, it's a song. If you don't get the joke, I don't know how to help you. So what I did here is I came in here and I bought off this candle here, but it was a very wiki type price action. Okay, so this is a very wiki price action, and you can see once it came to the top of this, we'll call it the magical wick zone, it printed a huge rejection candle and it stopped me out. This candle is a bearish engulfing. Okay, I just call it a big red candle that's not going in my direction, so therefore I am going to cut it. Now if you pair it with what SPY did, you can see once SPY started to curl and do the backside move, everything else rejected with it. So therefore I got stopped out. And I'm reading this real time and I know I'm going to get stopped out. But again, there's nothing for me to do. I either get stopped out or I hit my price target. I don't panic and start clicking buttons and freak out that I'm wrong. No, I just accept my risk. It hits my risk. I lose money. It is what it is. I made 2 times more on shorting SPY on the backside than I care about Jeffrey Bezosing me. It means nothing to me. 8-6. This is when the home runs started to accumulate in August. So first week, we had a pretty good week, and now we start to really get ramping up. So Apple announces some sort of investment. Okay, basically he's getting into bed. I made a whole Twitter thread about this. He's getting in bed with the U.S. government. Okay, chestnut checkers. It is what it is. I don't care about politics. So Apple releases they're going to build whatever, a couple billion, maybe 100 billion, who knows. They're going to put money in the U.S. So the stock rips. Okay, once we get over the pre-market high, this is a open slap. Most people ask me, yo, Ellie, I don't learn how to trade the open. I reply back, you're not ready for it unless you have 3 years of consistency. Okay, don't touch the open if you don't know what you're doing. Again, Apple off the open, pre-market high, perfect previous day high retest. Boom, you're in. Breaks the pre-market high. Add more. We're selling the rips. Then you're going to wait for it to come down, tap the ADMA, which it did. You're going to reload the profits, and you're going to sell the new high day push and overnight some trades. This was a huge, huge day. It goes to show paying attention to the news is essential in this market. You have to pay attention to the news. If you don't know how to find the news, go on X, type in stock market news, okay, in the search bar, and you will find accounts that post the news for free, and you can go look there. You don't need to spend money for news. That's what 99% of us do. We all have free stuff. Okay. Now, that same day, I noticed that AMD was weak. AMD broke the daily 20 EMA. So if we think of EMAs as layers to the onion, so this is the 8, this is the 20. Okay, so here's the 20, and then you can slap, I don't know, we'll put a random EMA on there, okay, this red line. If you break the 8, you're going to go to the 20. If you break the 20, you're going to go to this red line down here. Okay, so this blue line here is the 20 EMA on the daily. We broke it, retested it, this is your short spot, and then we faded it down until it curled back over the EMAs. Not a home run trade, still 43%, I think is what I posted on this. A good trade nonetheless. Just showing you different type of sort setups that I execute on a daily basis. This is a 130 scalp on SPY. So I'm not going to give away too much sauce here, but basically we bought calls at 130 and we made money. It's also over the previous, the pre-market high, and then the previous day high is up here, and you can see exactly where it tapped. You can guess where the target and the risk was. Use your imagination, but this is a 130 scalp. I think it was like 26 or 27% return on the options in about 2 minutes. This is another Tesla opening trade in 10-minute purple profits. Okay, off the open, you need to be fast. If you don't do any sort of pre-market prep and you're not up an hour before the market, you do not earn the right to trade the open. I see time and time again, people lose metric fuck tons of money trading the open, and it is just not for you. I've been trading the open for 5 years. You just started trading 6 months ago. Let's start with understanding what's a good dip versus a bad dip before you start slapping contracts off the open. That being said, this is an explosive breakout move. Okay, we call this the noob move. So what did we do? We slap a bunch of contracts off the open, big size, we scale the highs, and then whatever we make, say we make $1,000 on this trade, our risk on the next trade, when it comes down and taps the purple line right here, we then put $1,000 in as our risk, and we scale the highs. This is, again, repeatable. You're going to see a lot of themes in here. If you hit a good opening trade, you wait for the dips, and then you reload whatever profits you have for the next push. Now, when Tesla has explosive moves, it tends to do this in multiple days. A lot of people think if a stock looks like this, okay, a perfect A+ bull flag on the daily, it breaks out for 1 day, they think that is the entire move. No, if the stock has been resting for 30 days, it's likely going to break out for a couple days. Therefore, on day 1 of the breakout, we're going to look for day 2 of the breakout. I have talked about these on my Twitter multiple times, but we're going to look for the day 2 setup. So if a stock makes a big move on Monday, on Tuesday is going to be the tippy top of our watch list. Now you're going to ask, how do you find those big movers? Very simply, you pay attention to what's moving every day and you add them to a watch list. People think there's like this magic trick to it. No, if Tesla moved 10%, we are going to add it to the day 2 watch list because our goal is to make another 10% on Tesla. Very simple price action. Okay, Tesla, same thing. Off the open, huge move. But this is actually an interesting case study I want to show you. Comes down and taps the ADMAs. This is our reload spot. So we sell the highs, scale. Obviously, we keep a small portion of it because we're getting good fills, and we just roll up to the next strike price. But a lot of traders will sit in this pattern. So this is 1, 2, 3, 4, 5, 6, 7. So you have to sit in this pattern for 70 minutes, an hour, and the stock is not making a high. A lot of traders, they get grinded up. They think it's a short. They start panicking, blah, blah, blah. All the, rookie mistakes that are entering your head. It's you're wrong. It's going to break down on you. It's all over. You're going to blow your whole account. What are you doing? You're so stupid. In reality, it's just grinding. Okay. It's making higher lows. Okay. This low, this candle is higher than this one. This one's 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 higher than this one. You get the idea. It's just forming a pennant. It did not give any signals to break. So yes, did it suck sitting in Tesla contracts for over an hour? Yes, but it didn't suck making a ton of money because I held. I would have felt really shitty if I stopped out and panicked and sold for a loss. This is the difference between, I would say, a veteran trader versus someone who is just starting. For me, I'm not scared. My system tells me when to get out. For you, you sit there, you freak out, you start asking questions, you start, messaging me over my DMs like, yo, Elliot, these contracts are not moving. What do I do? I'm freaking out. Like, that is not how traders do it. If you want to do this full time, okay, and quit your job, how are you going to ask your boss, which is yourself, if you should get in or if you should get out? It doesn't work that way. But great trade nonetheless. I just want to show you the lower high concept, something I've taught hundreds of times. So keep this on watch. Look, it's just grinding the ADMA. All right, you look. Let's just do this. Let's just delete all of this. Delete all this. Okay, we're above the previous day high. We're above the pre-market high. So therefore, we're going to buy dips off the EMA. Okay, rule of state: don't stop out until it breaks the EDMA. Boom. Okay, that's it. Make it real simple. Ignore my entire rant. That's what it says to do. Alrighty. AMD, this is a pre-market high to previous day high. Okay, so this is going to be, it's kind of a day two setup. This is more of a, what I would call a range high, so range low to range high and relative strength sort of example. So we can see that we kind of flushed the lows. So we flushed those previous day lows over here in the pre-market session and then quickly reclaim them. So once you reclaim them, it's not a short. Okay, you do not want to short it. Yes, off the open, it was below it. But once it reclaims that pre-market high, I like to think all of the overnight bears, so all the people in here are getting bagged. They're now stuck. They're forced to cover. So in a situation like this, think of this as like support. This is the range lows or the bear gulag. What do we wait for? Pre-market high breaks. We look for a test of the EMA, which is right here. And what are we going to do? We're going to risk the low of this candle, look for the previous day high, and congratulations, you got the previous day high. Now, people are going to ask, yo, Ellie, why wouldn't you buy something like this over here? It's because it already went, okay, from the range low to the range high. It's not good to enter when it's already at the range high because the shorts are going to come back in and stuff it down. So I'm not going to buy this type of flag up here. This is also a lunchtime flag, which has a lower probability than a 10 a.m. or 10:30 flag. Okay. So this is one of the best trades I had of August was the IWM Mega Ripper 3000. Okay, so this is a new setup I invented. Just kidding. It's the same thing I do every single day, but it was just CPI day. So you can see IWM kind of forming a wedge here. Okay, a wedge. But I don't care if it's forming a wedge. You can imagine any patterns you want, but this is not, you don't enter in the wedge. You wait for the pre-market high to break. Okay, so it breaks, but then it prints kind of this toppy candle. When I see a toppy candle that looks like this, it means that a reversal is likely incoming. Okay, what do I mean by reversal? It means the next candle is probably going to be red. Boom, it's red. But that redness only comes down right to the ADMA. So as you're watching this real time, another question I get all the time is, yo, Ellie, do you wait for the candle closes? I'm watching a 10-minute chart. I'm not going to wait 10 minutes, okay? If the candle is going to close above the pre-market high and it's 9.5 minutes into the 10-minute candle, I'm not going to wait an extra 30 seconds because the extra 30 seconds is going to put me a high a day. We're going to use common sense. Is it above the pre-market high? Is it above the ADMA? Is the candle more than likely going to close up here? If yes, we buy calls. So we bought calls and just rode the ADMA all day. All day, constantly, every pop, we're reloading a higher strike price, and we are just milking this thing like a cow, like a chocolate money cow. Just money everywhere. This is a beautiful, beautiful setup. IWM, the contracts are like 20 cents. These things will go to 150. Just absolutely insane. You can even overnight these. Fantastic trade. It's very simple. Look, you're not going to enter on this pre-market high retest because the 10-minute candle is super wicky. You wait for the dip confirms, it gets back over the pre-market high, and then it trends all day. Gorgeous. One of my best trades on IWM of August. Alrighty, so here we go. We have another trade. So we made about 103% in 9 minutes. I only posted the screenshot here because people are not going to believe this, but I do this every single day. So yeah, so here we go. We're above the previous day high, above the pre-market high. We smack it off the open. Once this flag fails right here, it kind of broke this flag structure. We cut it for a loss. 103% in 1, 2, 3. So 9 minutes. Pretty straightforward. Above the previous day high, above the pre-market high. It's a slap all your contracts off the open and sell when it stops working type of setup. Next, we have SPY inside out puts. Okay, what do I mean by inside out? Is the candle started the day looking like this. But now it's looking like this. So it went up and now it's going back down. So here we go. We break the pre-market lows. We break the previous day highs. Okay, because it's inside out candle, previous day highs. Okay. And then it comes up. You can see all pops to the previous day high are getting sold, sold, sold. We enter on the ADMA and we cover it once it gets back over the purple line. So nice little scalperoonie right here. Then the market went into what we call summer mode. Okay, so summer mode is what happens. About midway through August, the market gets super, super choppy. So in order to save everyone's butt cheeks, I did a live stream. So I did a live stream. It was a 20-minute live lesson on how to make money for the next 2 weeks during the summer. I knew the market was going to get rangy. It happens every single year. This is when I was a young trader, I would blow up all my summer profits and come into September very, very tilted. Now I don't do that. So here we go. Market officially went into summer mode, and I posted this chart. What am I explaining through this chart is the range. There's a range in between this level. Okay, so if we break the green line, we're going to rip. If we break the red line, we're going to dip, and we're going to retest at all-time high breakout. Okay, so here's the updated version as of today, 8/31. And you can see it broke the range. We get our expansion day, and then the dip buyers come in inside day before Jackson Hole. Jackson Hole sends us chopping the range some more. We get one more rippy day over here, but now we are just going back into the range. So it's played out exactly as I explained in the live stream to the T. All you had to do is show up. It was 20 minutes, and you would have made a bunch of money that week. So don't know what to tell you. All right, so we're gonna get into some losers here as well. So 8/18 was a mega chop day. It was this candle, the inside day doji candle. And if you came to the live stream, I told you that Monday was likely going to be super choppy. I literally said, please be careful, okay? It's going to be choppy. We're entering the first week of summer. We have a catalyst on Friday. It is going to be slow. That's exactly what happened. Slow doji day. All right, so this is a day 2, okay? The stock here is run, okay? And I should have run away from this setup, but I'm an idiot and I didn't. So I got bagged on the setup. It rips off the open and starts to consolidate, and I bought these dips all the way up on these shitty contracts with no open interest. This candle came in and took me out. What are you going to do? I thought it was a day 2 setup. However, I just realized solar is a Ponzi scheme and I shouldn't trade it. So I lost money here. Oh no. Okay, because it doesn't matter, because the next day we come into the market. We don't care about a red day. It means absolutely nothing. Okay, we're just going to go and, do what we do every day. And that is short the next Ponzi scheme, which is Palantir. So here's a good note. If the market is bearish, okay, high flyers, high beta names, Palantir, I'm trying to think some other Ponzi schemes, like HIMS, right? They will suffer the most, okay? So stocks that go up on air, okay? Up on air, aka the balloon, okay? Up on air, they will get popped and they will putter back into the abyss where they belong. So these are pop balloon setups. So Palantir was my number 1 watch for the short side. Why? Because it's a high flyer. It's going to be a pop balloon setup. Remember, retail, they see any red, they start panicking. They flush things out at the gates, and that's exactly what happened. So on 8/19, all I did is buy puts against the ADMA, okay? Puts, more puts, more puts, sell, puts, more puts, more puts. All I did is just buy puts on Palantir all day on 8/19 and play Counter-Strike. That's literally all I did. So it was below the previous day low, the pre-market low. It is a outside bearish day. I call this the retail sadness tears day because, again, any redness on a retail crowded stock, they head for the exits because retail does not know how to hold stocks. So yeah, they just dump it out, and there you go. That's it. People are going to say, yo, Ellie, this is a 10-minute candle close over the ADMA. Like, I didn't get in there. I'm like, okay, if you didn't want to get in there because you can't read the setup, that's fine. What you do is you wait for it to then get back under, confirm it's bearish, and you enter right here. It's really not that complicated, okay? It's not likely going to reverse on you when it's a bearish outside sadness day, okay? You have to understand the big picture. If you're just looking at indicators all day and you don't know where it is on the daily chart or what's actually happening, it's not going to work. I don't know how to explain it any other way, but yeah, I had people DM me like, yo, this is actually a 10-minute flag and I got stopped out. I'm like, dude, it's literally a retail sadness day. Like, what are you doing buying calls? Stop. Think big picture, what's happening, what's actually occurring. Is it bearish? Is it bullish? What is the trend? Can you draw a line for and it's going down and to the right? If yes, it's bearish. If no, it's probably bullish or chop. Alrighty. Here's another fun, exciting trading day. So QQQ. So it's either 819 or 820. I'll be honest with you, I didn't have like my normal setup open. So it's one of those days. So one of those days, similar to how we talked about, okay, if we break the daily 8, we're going to the daily 20. And if we look at this day, we broke the daily 8, and what did we do? We sold to the 20. So put side paid huge. And then the daily 20, which is this line right here, I bought calls. I know, Ellie, you're fighting the trend. The 10-minute system says if it's below the I don't want to hear it, okay? So you don't understand what's happening big picture, okay? You can look at the 10-minute all you want, but if you don't know what's happening in the big picture, you're not going to make any money and you're wasting your time when you're studying, okay? People are going to get mad by this. I don't really care. This is just the way the market actually works. So we print a doji candle, okay, a reversal candle off the daily 20 EMA. That means that there's not enough buyers, there's not enough sellers, okay? But since this is at the daily, okay, daily, not the 10-minute, not the 3-minute, not the 1-minute, the 2-minute, 3-minute, 4-minute, 5-minute, none of those. It's the daily 20 EMA. Print a doji candle. I know that's an area of support. Other traders know it's area of support. So I hammered a bunch of calls and made like 92%, okay? All I was playing was the extension fill to the 10-minute 8 EMA. Super simple setup. Don't recommend the bottom tick things unless you're extremely experienced. Again, I've tried this setup like 300 million times. I don't even know. But yeah, it's simple setup. Okay. So this is actually the day where SPY and QQQ broke down from that range. So if you attended the live stream, we talked about the daily range. Okay, so when something rests, when it breaks the range, it's going to produce a large trend move. And that's what happened, okay? On 820, we started to break the range, and then we got our large trend move. Again, you don't need to understand the big picture for this, but just know, look, you're below the previous day low, you're below the pre-market low, you broke the daily range, it's bearish, okay? There's not a dip buy here yet, not on day one. You can look for dip buys on 2, 3, 4, okay, you need. So look, this is how ranges actually work. Okay, so here's the top of the range, and then here's the bottom of the range, okay? So you chop up here, and then you gulag, okay? Then when you gulag, you got to find buyers, okay? So you got to find buyers in this range, and if they break it above, you're going to then go to the top of this range over here. That's how stocks work. They move, and then they zigzag, and then they move up. And then again, if this range here decided to break to the downside, you would have another rest leg and go down. That's how stocks move. It's very simple, easy to understand. So you can see both these days, look at the large moves on SPY and QQQ. I mean, just absolute bloodbaths across the board. Fantastic trading day till about 11. Okay, this was another just a QQQ scalpy scalp, just kind of demonstrating. Look, if you want to play in the chop box, you would think this is a short right here. You get stopped out, you get bagged. However, when it actually closes under, retested a bunch, and price stays heavy, you can come in here, you can short it for 58%. Next, Palantir, the LE model. Okay, so the LE model, levels and EMAs, you all know it by now. And when you see, look, we broke above the pre-market high. Okay, nice strong 3-bar play. We're going to enter long once this 10-minute candle closes mostly. Okay, what I mean by mostly means that maybe like 8 out of the 10 minutes, okay, is above the pre-market high. Notice I didn't say 2 out of the 10 minutes because that's only 20%. Okay, when it's majority, okay, majority means greater than 50%. By definition, ChatGPT it, you enter long. You're going to target the previous day high, which we got, and then it decided to rip a little bit more, so that was super cool, and we just held the runners against the 8 EMA. Super simple. Okay, so now we're getting later in the month, which is last week, with some killer trades on IWM. So IWM breaks above the previous day high and then comes down, retests it with a hammer candle, gets above, higher low, ADMA, breaking the flag, boom. Absolutely killer, and you sell the highs. I mean, they make textbooks about this. Like, it doesn't get any better. People are going to ask, yo, Ellie, why don't you buy this candle right here? Okay, maybe if you DM me, why didn't I buy that candle right there? I'll give you a gift. So while you type it out, I'm going to wait a minute. Okay, so now that you DM me why you think I didn't buy this candle, it's because it's ugly. It's big and red. It's big and red. That's why I didn't buy it. So if you didn't DM me the word big and red, I don't want to tell you. But yeah, it's because it's big and red. And look, it didn't like push. Like if you want to see a flag push out of the highs, okay? Think of these trend lines as like launch pads, okay? So if you're not breaking above the trend line, okay, it's not going to push. It's not going to be a big, clean trend move. And you can see it kind of bumped its head and then it came down. But then we formed a nice hammer candle. All the candles agree. All the candles agree. Stars align, and we sent it to the moon. So in the video, fake breakout. Everyone had their eyes on that 180 level, which is off the open, and everyone chased it long. All the noobs bought the open, got bagged, and I shorted it for like 95% on puts. Super easy setup. This happened before on the video. I forget what day it was, but I think it was either the 170 or it was like the 100 breakout. Same thing happened on earnings. So the way that I'm not going to post on social media, but I will put on YouTube for you guys. This happens a lot with NVIDIA. So I was already prepared for the short because this has happened before. Okay, so if things occur once in the stock market, they're likely going to occur twice, thrice, quadre, whatever, 4, 5, 6, 7, 8, 9, 10s, because that's just how stocks work. Okay, and what happens is people learn through trauma. So if the last time, okay, I jammed long off the open like an idiot, okay, and I got bagged and had to flip short to make my money back. This time, instead of jamming long, I waited for the short because I had PTSD from last time. This is all things you learn from screen time and really just knowing your setup. And then to wrap off the month, we really had like literally a free money LOL setup. It's below the previous day low, below the pre-market low, against the ADMA. Traders were messaging me saying they would get scared by these wicks. Yeah, I don't really care about those wicks because it didn't break the high of the flag, so there's no reason for me to panic. I think there's a reversal. It's still heavy. It's still a short. You're going to short it, and these puts went pretty nuclear. And then also, I didn't trade on Friday because I was traveling. You could have shorted on Friday too and made a bunch of money. Okay, so I know I just talked a lot, but let's talk about the action plan moving forward. So this is a friendly reminder to myself is anytime I think I'm smarter than the market, I get bagged. I'm definitely not smarter than the market. The market's way smarter than me. There's guys that went to Harvard. I didn't go to Harvard. So yeah, anytime I think I'm smarter than the market, I get bagged. So if I get that thought, I'm just going to cut the trade moving forward. That's how I got bagged on run. I thought I was smarter than the market, got bagged. Next, avoiding trash can setups has saved me millions in mental capital. Okay, so I'm not going to be trading on these like outer ranges of the range and like this like fuzzy gray area. No, it's not worth it because I want my mind to be fresh, not tilted from the previous couple of trades. That way, when the big free money LOL setup comes, I can smack a bunch of contracts and make a bunch of money. I'm not going to be dwelling on how I got chopped out of SPY puts 300 times. Next, tracking big movers has been incredible returns, okay? So you want to track the big movers, okay? Like MDB. MDB should have been all over your scanner. Those type of setups you want to keep track. I don't miss any big movers. That's how I find all these setups. That's how I find stocks to trade is the big movers. Day 3 setups, day 4 setups, day 5. Range breaks, consolidation, all-time high flags, 52-week high and low breakdowns. You name it, that is how I'm making this type of money, is I'm tracking these movers. Okay, there's not some magic website you go to. It's going to give you all this information. Every individual has their own unique way of scanning. I have my way of scanning. I've taught my way of scanning, but that has been a game changer for me, is tracking these big movers. Big picture setups continue to pay large. So at the end of 2024, I made an announcement on my Twitter that I was going to be focusing on the big picture setups a lot more going into 2025. This was my big career goal as far as a trader for the year 2025, is I really wanted to hammer those big picture setups. What do I mean by big picture steps? I mean like big daily flag breaks, pennant breaks, you name it. I was all over them this year because I'm tracking them. I'm constantly checking them every day. A lot of traders, they track these setups and they get in too early because they just don't know what they're doing. To be frank with you, is I wait for it to break out, for there to be volume, for everything to align in order for me to put on that big size and hit those big trades. This is going to continue being a focus until the end of the year. It's working extremely well for me, and I think it's really where my edge lies. And I think just as I move, further and further in my career, I think there's a lot of money is going to be made here, and I really enjoy it. I enjoy the research element and everything like that. Next, avoiding day before data days has reduced blow up risk. So a lot of times when I was a new trader, like before any acronym days, okay, so J hole, okay, not to be confused with K hole, okay, FOMC, CPI, like these are all acronym names. Okay, if you want to sound smart, you can call them high risk data days. Like fuck out of here, bro. There's acronyms and they're really fucking noisy, and I hate trading them. Okay, so avoiding the day before, not the day of or anything like that, but the day before has greatly reduced blow up risk. Okay, so this is a problem I had when I was a new trader, is like these big days, the day before would be super choppy and I would be so excited to gamble, I'd piss away all my money. Okay, so avoiding the day before has been fantastic and has really helped my returns and as well as my mental capacity. Lastly, this is a note for me. If you're more experienced, you understand this. If you're not experienced, you're not going to understand this. So understanding range sizing versus trend sizing. Okay, so range sizing is when we're in a box. Trend sizing is when we're ripping. Has really increased my performance across all my portfolios. Is when we're in a range, I like to more so add to the swing portfolio and look for those big picture setups and those big picture share trades, as well as options trades. I've done extremely well with option swing trading as well. Versus my day trades on the trend sizing, my swings are already loaded, so that way I can focus on my day trading accounts, and then I use those gains to just amplify the portfolios across the board. So this has been really key for me. I'm still fine tuning it to what I find is comfortable. Sometimes there's times where I have too much size and I get a little sketched out. But overall, I'm really happy with my sizing. I think I can do more and more, but I think that's going to be pushing the limits. And coming into Q4, I'm definitely going to be pushing the limits a lot more. And then starting 2026, we're really going to be pushing the limits to see what's possible. I'm at that stage in my trading career where I've had numerous years of continued success, but I really want to push the edges of what's possible. And when you start to push the edges, you start to see what you're really made of, and kind of we call it your mental makeup, right? And I just think it's my time, and I just want to see what I'm made of. And I want to, get those big gainers. I mean, dude, some of my share portfolios across the board are up like 168% this summer. Super happy with the returns. I want to be more and more focused, more and more concentrated in those big picture setups, trailing with those daily moving averages. And I've been studying a lot more and, learning from some of the greats from before me. And there's so much I've learned this year. It's truly incredible. And I'm just excited to see what I can do and, how I can, just do better than last year. That's all I want to do, is just do better than last year. Granted, I'm already there, but I just want to see what I can do. But yeah, so thank you for watching this. Hopefully you took some good key takeaways. I know a lot of the OGs have been following me for years. Love these type of videos. If you're new here, just pop in a headphone and hope you learn something. But yep, more videos on the way. I got like 3 that are being edited right now. I'm gonna drop sauce all fall. So go birds, peace.